Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 21st at about noon Eastern. Well, the tech-heavy NASDAQ and the S&P 500 are kind of sidestepping today near recent highs as mega-cap growth stocks recovered after sharp losses in the previous session yesterday, while the Dow is taking a breather after a 9-day winning streak. The blue chips were still on track to end the week higher after it rallied in the previous session, notching its longest winning streak in almost 6 years, supported by gains in Johnson & Johnson on strong forecast. And on that nice and cheerful note, let's go on to 3 charts that could give us some insight into the week to come. As we always do, we're first going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $453.45, or about 45.34 on the S&P 500 itself. Now, from its January lows down here, the SPY is now about 20% higher than this year's January low, again, back here at 378. And that's a good thing, and it's positive and very nice trading. Now, we can look down here and see that the market started up from the January lows, quickly moved through the 20-day, the red line, 50-day green line, and 200-day moving average, moving up into the 400 zone, then back down, made a higher low, and then moved right back up to its prior highs here in February, kept going, and then on its breakout in May, after right in here, it started breaking out. We had to get through that debt ceiling negotiations. We did that. It continued in a very bullish move up to June the 15th, and it moved up to a high there at $443.90. Now, from this high, the SPY pulled back to its 20-day moving average, and then note how the 20-day moving average, and actually ever since the debt ceilings negotiations were done, the 20-day moving average here has pretty much acted as a support zone and certainly a trend line. So then it moved up again to that high in June to almost 444, pulled back to its 20-day, then back up to those highs again, back making a higher low and stretching out to where it is now at 453.55. So you know that I like to look at long-term charts. And you can't see it on this chart, of course, but I've been looking at monthly chart of the SPY. And in February, March, and April of 2022, those 3 months all hit their highs right up here at this level from 450 to 462. So all 3 months, it was like a boom, boom, boom. And it was like that. So all 3 of those months in 2022 again hit those highs. So now I'm wondering, the SPY is back up to those highs again today, right now at 453.45. So can the SPY continue with everything it has to deal with, including next week, the beginning of earnings season with some big momentum stocks? We also have the Fed meeting next week, and we'll have to see what they do with rates. So just knowing that is usually a help. We do see support here for price at the 20-day moving average, which is coming in at $443.82. We also have support here at 437 sitting on the 20-day moving average. We have support down here at potential price support at 431. And at the same place, 431, we have the 50-day moving average coming in here at 431.89. So all areas here of potential price support and indicator support, that's a good thing. Because the SPY is stretched pretty high here, I am going to raise stops, and because of what we have going on next week, I am going to raise stops on my short-term trades. We do know that the RSI here, we've been talking about that for the past few weeks. It did move up into the overbought zone, and it softened just a little bit in the last 2 days. And of course, it is because of the last couple of days trading, price backed off a little bit. So at least we're not as overbought as we were. Now, the SPY is still in an uptrend, higher lows and higher highs for sure, and that's a good thing. But again, I'm going to ask short-term traders to pay attention to their stops. Our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. This represents the NASDAQ 100, which has the top non-financial companies by market capitalization. In the NASDAQ, we're thinking of stocks like Alphabet, Amazon, NVIDIA, AMD, and Tesla. Now, when I captured this chart today, the QQQ was trading at $337.23. The all-time high was in November of 2021 at 408.71. So we're still about 6% higher. We're about 6% off those all-time highs, but getting up certainly close to them. Now, the Qs have been in an uptrend actually since the January. They opened and it was the January lows. We didn't know it at the time, but it was. The Qs has actually been in a pretty decent uptrend since the opening of this year. It rose up pretty quickly in January, shot up pretty high, then backed off a little bit. Made some highs here in February, backed off to the March 25th low at 285, and that was right at and just barely below all of the major moving averages here. So it was below the 20-day, below just barely below the 50-day, and barely below the 200-day. And that's when they were getting ready to cross here, these major moving averages, because of the move up in the first couple of months of the year. From there, the QQQ has made, an incredible uptrend since those lows at 285. It's walked right up. A lot of the time, it seemed to ignore the debt ceiling negotiations, which were certainly putting pressure on other parts of the market. It actually here rode up, jumped above the 20-day moving average, used it for a support line and a trend line, and shot up to a high right here, the June high at $372.85. It backed off a little bit here. Look at the RSI getting overbought here, getting overbought there, moving over the 70 line, which it really doesn't do that often, but it certainly has in the last few months. And when the RSI, the 14-day RSI indicator, it gets overbought, it's not an immediate thing, but it usually price will usually soften up when the RSI becomes overbought. It will usually soften up within the next few days, and price did. It moved back down here, not a lot, but back to the 20-day moving average, little bubble up, right back down. And then it flew up to a high, a relative high, meaning not an all-time high, this past Wednesday to $387.98, then backed off to today's price we've got it at now $377.23. So nothing we can argue with here. It certainly has been nice. The Qs have been moving in a very sweet uptrend here. And again, we talked about the RSI. Now, on a long-term chart, we saw how it came up here up to we saw how it came up here and shot up to nearly 388 at these highs here. On a long-term chart, we can see resistance at this level from the last quarter of 2021 and the first months of 2022. So I just want you to know that. That can be something you want to put at your elbow or make a little note, because the long-term charts can be, what happens on them can be very, very powerful. So it's not a negative note, but it's a, hey, let's pay attention type of thing. so that we're aware. Now, our next price support down here, if the QQQs dip a little more next week, we've got the 20-day moving average coming in at $371.48. Call it 371 if you like. We've got more price support here at 364, also moving average support. Well, we just talked about the 20-day moving average support. So more price support at 364, more price support at 367 down here. And of course, we've got the 50-day moving average down here at 356. So like the SPY, we have plenty of price and indicator support coming in here. Should the QQQ need it, we'll have to, again, let's trade wisely here and let's keep an eye on our stops. Our final chart for the day is a daily chart of the S&P 500, the SPDR S&P Biotech ETF. Now, if any of you got into the XLV that we talked about last week, you will note it is pretty much in the last few days gone straight up. Probably again having to do with earnings Johnson & Johnson. So you might want to maybe take a little tiny bit of profits there, or at least raise your stop on that. So that worked out really well. Today we're looking at a daily chart of the SPDR S&P Biotech ETF, the XBI. It has 136 components or holdings. Some of the top holdings are Bridge Bio, Acadia Pharmaceuticals, Halozyme, Vertex Pharmaceuticals, and Novavax. Now, when I captured this chart today, the XBI, it was trading at, $85.23. Now, you can't see this, but you know me, I went back and looked at at a monthly chart. The XBI made an all-time high of $174.79 in February of 2021. And then since then, it started falling, and you can't see it on this chart, but it slid down to lows of $61.71 in May of 2022. But looking at this chart now, we can see, and the XBI moves a lot, so it is not like trading utilities or some other ETFs that are calmer. This does make some movement, so know that. Now, it did make a recent high in February, hold on a minute, at $92.60 right here on this chart. Look left right here, okay? It made a recent high at $92.60, then it dipped to the March low at $74.22. Now, it was a gradual, it didn't drop straight down by any stretch, but it certainly did get down here to March lows, and most everything made March lows this year. Since then, it rallied and jumped up to a high here. It moved back up over its 20-day, its 50-day, hit its head on the 200-day moving average. That was resistance. And look across this line here. Beside that 200-day moving average, we have, if I could draw a straight line, we have price resistance there too. So it bulked right there. Pulled back a little bit, then shot up, moved through all of that prior resistance, moved up here to highs in May, down, a jump up, and then we have a gravestone doji here, back down to the 200-day, and then back up to highs here in June at about 91, And if we look left, we can see that these highs at 91 kind of hit here very close to the highs here in February of 92. So see how these resistance areas can work. And you say, well, what happens here? How do they work? Well, they work because people who are traders or investors who bought back here or sometime before where we are now said, gosh, the last time I bought the XBI, it went up to 92. Maybe they can't read charts, but they have memories. And they say, last time it hit 92, I got creamed. So now that it's hitting 91.92 again, I'm going to sell and at least get out even. There's that kind of thought process going on. So it doesn't always, price resistance doesn't always mean price will stop there, but it's certainly something we take into consideration. So we have that here back down now to where it is now. Now on a longer term chart, I am going to tell you that there is support here for the XBI. That's one reason I'm considering it. Now, second idea here I want to tell you about before we go into the actual numbers. A lot of you are looking at this and saying, is this a head and shoulders? Toni, we know that's a top reversal pattern, and why in the world would we consider buying here? I'm going to tell you that I am considering buying here because head and shoulders, a lot of people don't know this, if they are not fulfilled by breaking down, okay, if it's a head, the left shoulder, the head, potentially the right shoulder, but it isn't a shoulder yet. To be a shoulder, it has to come down and break below this line here. And then, yes, then that can be a negative pattern, but it can also be a very positive pattern, especially if it breaks out here instead of breaking down. So, and as you know, healthcare is looking, and generally is looking pretty good here. So, is this a head and shoulders? We won't know until it comes down here, and then I will not be in that trade anymore. So to me, this is going to take, I'm going to take a little defined risk here if it works out the way the way I'd like it to. So in the coming week, so we've got it above the 200-day moving average. We've got it above the 20-day. Today it's hitting its head on the 50-day moving average. In the coming week, if the XBI can stay above the 200-day moving average, and that's coming in here at $82 right now and 63 cents. So if the XBI can stay above the 200-day moving average, and if the market stays relatively positive, I may add a small position of the XBI to my trading portfolio, and I'm going to put in a stop here at $80.50. Now, if and when the XBI rises above this little pivot here, if it rises above $88, and so I'm going to make it right here, and closes above $88, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XBI in the coming week. But please don't use emotion to trade this. I would advise using some hard stops. So now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, trend trade, bottom fish, and more, check out these programs. They'll show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all my online training courses by going to the link on the screen right here, or simply click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.